Andrew Stafford, president of Prevail, here with Kerry Lawing, our CEO. We've got a hot topic today. Everybody's been watching the volatility in the markets. Kerry, tell us a little bit about what's on your mind. What did you see? What are some of the things that Prevail has done? And just a general outlook for clients on kind of what we've been through.
So the market's had several really good years. Okay, so people tend to forget about that. Depending on what you invested, even the indexes have had 3, 4, 5 pretty good years in a row. Now, with the election, we expected things to be different. We talked about it. I think people didn't really believe that the tariff topic was going to come up the way that it did. I guess in my view, I did. Because we as a country have been taken advantage of for a long time. Now, here's the thing I would say about tariffs. When this gets done, everything's going to settle. The journey to settling has been pretty bumpy.
It's been volatile.
And everybody is used to seeing returns on a consistent quarterly basis. This is one of the first times that the indexes have been negative for the quarter. I don't know. I go back 6 or 8 years. It's been a while. So to me, none of the companies changed. They're still making money. The earnings for the S&P that came out at the end of Q1, the early indications are the companies are doing just fine. So if the underlying value didn't change and the market's volatile, our input would be if you've got a good portfolio mix, stay put. Quit reacting to the news daily. So what I don't like today is we all can look at our statement. We have some people with 401ks that are looking at it several times during the day. It's just...
That's not healthy.
It's not healthy.
That's not healthy.
Because by the way, a lot of times right now it went down. No, it goes back up. So number one, make sure you're in a good blend of investments at times like this. That's always key. And if you haven't, review it with your advisor. The risk dynamic and do you own what you belong owning? 2, quit worrying about what I would call which are temporary economic circumstances. They will affect the market, but they didn't affect the underlying value. And 3, in our view, this will level out. We've already seen the market recover pretty well.
Yeah, it had a strong few days.
That doesn't mean it's done. I don't think it is, but I think this will settle and the market will create a more normalized pace again. And people that go to cash are going to go out at the bottom and then have to re-enter. So then you have to make 2 decisions. So timing the market doesn't work. Emotion doesn't work. And if you need to talk to somebody when you're feeling a little bit off, that's okay. Call us or call your advisor, but know that this is not a good time to be going to cash just because there's volatility.
That was a crucial point that I think happened in 08 and 09 when the markets pulled back so bad. People tried to time the market. They went to cash at the wrong time, didn't get back in, and the markets ran from that point forward, and it wiped out a tremendous amount of wealth for a lot of people. Some of them prolonged their retirement. So I think your input's really good. You're not selling, so you haven't locked any gains or losses in. Be calm, let the markets do. There's some catalysts that could maybe change the second half of the year too that are coming with the tax bill and some other things. Do you have any input on that?
So, in our portfolios, we've held more cash than we typically have. And whether that's a good decision or a bad decision, time will tell. But we held cash because we wanted to be opportunistic in the things that we wanted to buy. There's a number of things that we just frankly thought were too expensive.
Overvalued.
And so 2 or 3 things going on. 1, I think it's good to have cash to be able to go in and buy things that are on sale, good companies. 2, if the big beautiful bill or whatever they're calling it this week gets through, I think you're going to see the market, because the market wants clarity. I think it's that. And I think the next thing that goes with that, to the extent that the Russia-Ukraine war, some of these other things settle, it looks like that there's a lot of information that July or so, some of these could get done or go away. If that's true, I think the market's going to have a catalyst to go up. So you don't want to be in the wrong position, but you also don't want to be disabled by market volatility. So it's some of both.
Patience and staying calm throughout this. And if you have questions, always talk with your advisor.
Check us out, prevailiws.com.